Hello, everyone. Good morning, bonjour, buongiorno. Thank you so much for being here. Warm welcome adding to Tommaso to the second day of the Blockchain for Europe Summit. Great to see so many faces this morning. There are more on that side than on this side, which is already, I think, we are winning. Special congrats to those who managed to navigate the way home from the legendary Delirium. And also a very, very special note to those who woke up this morning and went for a run with TRM and still made it this morning. Now, on a more serious note, we are here to discuss tokenization of real-world assets and whether this presents an opportunity for the EU. Now that the technology is mature, the institutional interest is growing, and the regulatory environment is taking shape, we shouldn't be letting this opportunity go for the EU. I have an excellent panel of experts. I am delighted to be here. I will let them introduce themselves. First, a word from me. I am Sol. I work for CoinDesk, the media and events group. We are also the team behind Consensus. If you don't know this, we also have an indices calculation services, a data service, and a research department as well. And we are owned by the institutional exchange Bullish. I look after clients across Europe, so you would have seen me in some of these events. I'm delighted to be here. Now, off to the panelists. I would like, first of all, for you to give a brief introductions, and if I can start with Alex at the end.
Hello? Hello? Okay.
Yes, that's good, Alex. Thank you.
Hi. Good morning, everyone. I'm Alex Wu. I'm at the Stellar Development Foundation. We're a foundation that supports the Stellar blockchain, which is a layer 1 open source public chain. I lead our US policy and cover the EU as well and work on our special projects.
Lee?
Hi, everyone. Hello? Hi, everyone. I'm Lee Schneider. Apparently, I don't know how to use electronics either. I'm the general counsel at Ava Labs. I lead all of our policy work worldwide, and there's a lot going on right now, and real-world assets is a major part of it, so I'm excited for this panel. Thank you.
Delighted to have you. Joachim?
Good morning, everyone. Great. Now it works. Strange technology. Joachim Schwerin, Principal Economist in the Unit on Responsible Business Conduct in DG Grow of the European Commission, responsible for blockchain crypto tokenization in the real economy for many years, also working on the financial aspects of blockchain and with a specific focus at the moment on Web3 and DAOs and everything that is out there in this space. So looking forward to the discussion on what we think actually since the start of our work within the Commission on blockchain as the thing that should be the baseline, and that is actually the real economy and how it can benefit from the technology.
Thank you. And Tom?
Thanks for having me. Is that working first time? Nearly.
Oh, well done.
So I'm a DTCC. So I sit within the digital asset business. DTCC is obviously is the world's largest CSD. I've spent the last 5 or 6 years in tokenization, primarily in the capital markets around securities. So looking at things like how you can tokenize intraday repo, or you can provide intraday repo services through tokenization, tokenized money market funds. And so, yeah, looking forward to the discussion.
Thank you. We have a great knowledge assembled here today. Joachim, I would like to start with you, starting with the European Commission's perspective. We know that the European Commission has been a global leader in defining digital assets regulation, particularly with MiCA. So my question is, how does DC Grow, and specifically the work around the supervision of integrated undertaking debates, view real-world assets tokenization? And what's the EC's ultimate vision for ensuring that these new financial instruments and the technology that underpins them integrate safely and effectively into the EU single market?
Thank you for that rather challenging question. Now, let me start perhaps with a few general remarks, because indeed I don't consider ourselves, and what I say are my personal remarks, I don't consider us as a global leader in that sense. We made a proposal on MiCA, we made a proposal on a couple of other things, and I think it's good to put things on paper to see what the vision is, but most of our work is actually more fundamental as regards the wording of specific regulations. And this also relates to what we're discussing here on real-world assets. We have said from the start that for us blockchain is more than a technology, and that it is a game changer for societies as such. That applies for the EU equally as it applies for any other country or jurisdiction in the world. So I don't see anything very much specific for the EU. What I see very much specific for DLT is the enabling of communities wherever they are that are focused on their own value system, that come together to do things that they consider as useful, and then apply DLT in order to create and safely transfer value. And what DLT offers is, of course, much more than the simple transfer. What it allows for is the scaling up of the value systems of local and regional communities. What it does, it certifies information that is at the same time distributed to many, many different places, which makes it much more resilient than any central data silo that we have, etc. So this is the basis of our work. It is really developing the fundamentals, developing an infrastructure, as we have done with our European blockchain service infrastructure, where we have now more than 24 big use cases that basically relate to all sectors of the economy. And what we achieve to do is basically help society out there, help industry, help citizens to tokenize anything. So for us, tokenization relates to value, and value is a concept that everyone can fill with life, him or herself. So what do I consider as valuable? That can be money, that can be intellectual property, that can be energy, etc. And one of the nice things is, of course, if you do that, that thanks to the ability of DLT to ensure the integrity of these things, let's take energy as an example. You can certify really from the source whether that is green energy, whether that is not green energy. You can feed it into the system. You have a much better approach towards pricing, etc. And a lot of other advantages that we all know. Now, we are at a very important point, because I think over the last 10 years, all of that has very much matured, and now we have to translate that into workable concepts. And this is where we have many of these discussions as regards to, for example, Savings and Investment Union, but also other projects. What does it mean, and how can we translate regulation that has very clearly not been written for Web3 or for the token economy into concepts that actually work in a digital domain? And you will see tomorrow, and I can't say more about that for obvious reasons, that in our proposals on the Savings and Investment Union, you'll find a massive inflation of, indeed, the term DLT in different contexts, because the understanding of what it is and how it can be used in the value chain has grown massively. But it still falls short of achieving what I think from a real economy and real-world asset perspective needs to be done. And I give you an example, and then I stop. When I usually try to explain what a token is, and I do that also with a view to our friends in Liechtenstein, I usually take the visualization of a container, because at the end of the day, if you visualize a container, it shows you very clearly the advantages of a token. It has a standardized size, so can use it everywhere on any means of transport. You cannot see from the outside what is in, and you can put everything inside, whatever you want, and someone has the key to open it. That is a token. So the concept as such is very simple, but when you discuss that with regulators, it gets a lot of problems, because they always approach it first from a financial regulation perspective and then also from a taxation perspective. So they think indeed that in the digital space, when a community tokenizes any type of asset, it is something big that moves from left to right, and when it has arrived there, then someone is the owner. That is not true, because we see that also in many use cases that we have in our sandbox. What we talk about here is code. We talk about smart contracts, and it's basically programming. So for example, when someone has the right to certain value on a token, you just adjust a little bit the code on the smart contract. You can also, for example, on energy transactions with your neighbor or with another cooperative, take the net value of that without anything changing position at all. So it is merely a definition of what you actually see as a transfer, as finality, and also as the settlement of transaction. And that is very complex in a process to understand. And the main challenge is really to find horizontal rules that apply to all use cases and let's not get dominated indeed what I call the totalitarianism actually of financial regulation and taxation, because that gives a completely distorted view of what the token economy is about.
That's a very good example about a very graphic example. I might challenge you, not for this panel, but to explain in a similar fashion zero knowledge proofs. I think that's also a concept that needs that sort of tangible explanation, but that's a different thing. You were saying real-world assets tokenization is not just an opportunity for the EU; it's a global. And at the end of the day, blockchain is essentially decentralized and global. But you are, in a way, trying to create this framework for the EU to thrive, right? And this is what we are focusing on now, despite the fact that we have some friends from across the pond who will also give their perspective as well. Tom, does anyone want to add anything onto this, or we'll move to the next question? Lee?
Sorry, I agree with everything that Joachim said. The only thing I would add is I like the container analogy, but I actually prefer the piece of paper analogy.
Go on then.
We used to write everything on pieces of paper, and that's how we knew somebody owned something or didn't own something. Our friends from DTCC showed us the way to move that onto computers. And really what a token is, or what tokenization is creating a digital representation of what we used to put on paper. And so we sort of went from a paper-driven economy to a computer-driven economy that replicated the paper economy, right? Think about PDFs and signing PDFs. And now we can move to the next iteration, which is tokenization. And that's why what Joachim said about ensuring that we understand the nature of the asset that has been tokenized is so hugely important. It's important to the utilization, to the valuation, and to the legal and regulatory categorization. And so, again, from my perspective, I agree with the container analogy, but I like the paper analogy better. It's probably because I'm a lawyer, not an engineer.
Thank you. Alex? We can hear you.
Hello. Okay. I was going to double down. I agree with what Lee said. I mean, I think if you look at money or cash, it's something that you can use, but something you also own, right? It's like a bearer instrument, and then you optimize a bit, and then it's digital, but then the money that you have, you no longer can own, or you have a representation of ownership, and then tokenization seems to be kind of this amalgamation of both benefits, right? So you can kind of move it seamlessly as you would with anything electronic, but you also have like a representation of something that you can actually hold. So it's a bit of a mix of both that we've kind of come along.
There's a middle ground there. Thank you. Tom, if I may turn to you at DTCC, you focus on providing stability, standardization for the global post-trade infrastructure. So when we talk about tokenizing real-world assets on a large scale, the infrastructure has to be sound, rock solid, and consistent globally as well. From your standpoint, or from DTCC's standpoint, what are the most critical global standards and harmonization efforts that are needed right now to support tokenization?
Sure. Well, I'll say, Lee, you've kind of stole my opening pitch around the paper to computers to tokenization. I guess I'd say that pretty much it's an interesting analogy because we've gone from paper to dematerialization, but actually there's still container loads of paper that are moving around the financial markets or sat in vaults from global notes through to other pieces of paper. And so I think the definition of tokenization, I'm coming at this purely from kind of a capital markets perspective, is a conversation that I have on a daily basis with kind of market participants. And here the standards of where it's a tokenization of a traditional asset, say an equity or a bond, and what does that actually represent? Is the token a claim against a custodian? Is it a claim against a CSD? Who do I go to get the underlying asset if I need it? And so for the foreseeable future, where we're talking about tokenization of existing assets, you're going to need the ability to move in and out of a tokenized form and a traditional form, depending on where you're looking to deploy that. So what that means is the way tokenization has broadly been approached with things like intraday repo, tokenized money funds that already exist, rather than native tokenized money market funds that only exist on chain, is that there's been an attempt to try and fit the tokenization into the existing legal structures. So whether that's the token representing effectively another way of tracking book entry. And so some of the fragmentation that you see in Europe, as an example, some of the kind of previous projects I've worked on or products I've worked on is the view of where you can record ownership or how you can record ownership on a DLT in Luxembourg is very different from how you can record it in Germany or in Belgium. And then when you look broader than that and you look at US and even Japan, the central bank in Japan recently published a paper around tokenization, and the complexities there is that actually there's around 5 different regulations that need to come together to really to come to a conclusion in terms of how that token represents ownership of an underlying asset. And so for us at DTCC, and we issued a paper last year in collaboration with Clearstream and Euroclear. The focus is really on driving those standards of, okay, how do we, and goes back to why does CSDs exist? We need to be in a position where we are enabling market access. So we are encouraging existing entrants and new entrants to be able to access the system. How do we go about doing that? We do that by collaborating, as we did for the paper that we published last year, on how we are going to start to define some of the standards in terms of the way the CSDs operate. But underpinning all of this has to be a regulatory framework which supports a clear understanding of what a token represents. And then really whether that token is a building, whether that token is an equity or a bond, if it is a claim to another to a party who has that in a control structure or a control account, then that is well understood and well defined. I think the process that most financial institutions are going through at the minute is they're broadly comfortable with the idea of tokenization, but what in my experience, what every firm is doing is going to outside counsel to get an extensive legal opinion, which basically confirms that this fits within the existing legal structure for how you track ownership in book entry. So we're part of a number of associations to try and drive some of those standards, because really that's when you start to change, when there's a true understanding of what the token represents and you're not kind of gated with different jurisdictions and regulations and different token standards, then you've got the underlying asset in a position which is able to then be mobilized in tokenized form. The token is standardized, and then then you get into the interoperability discussion, which I know we're going to cover, of how do I then deploy that? And that's a whole different discussion of what's the role of governments, what's the goals of kind of institutions like DTCC to enable that interoperability.
And do you feel that here in the EU you have that clarity in terms of what a token represents?
I don't think so. In my experience, and it kind of goes to what Joachim was saying previously, that if I'm somebody who's tokenizing an asset in Luxembourg, I probably have a clearer understanding because the regulations are prescriptive around how you can record ownership through the use of a DLT. Germany is relatively clear as well. Belgium, is less so, as an example. So I think that's where it depends on where the entity is that it's involved in that kind of process of tokenization. And then you can look at the US and Japan, as I mentioned.
It's a challenge for harmonization as well. I want to move to examples, unless there's anything to add to Tom's point of view. Excellent. Okay. So we talked about containers. We talked about paper becoming digital. We have Lee and Alex from Avalanche and Stellar. It would be interesting to, if you could give us, you're at the end of the day, you're involved in building the infrastructure for this tokenization to happen. If you could give us some examples of real-world asset tokenization that has been successful. We talked, Lee, in the prep call about non-financial examples. Maybe we can start with that and then let Alex from Stellar give us another examples which are more focused on finance.
Thank you. So my sort of favorite example right now is event tickets. So tickets to concerts and sporting events, et cetera, et cetera. Non-financial use case, something that does get traded, does get swapped from person to person for various reasons. Something that uses NFT technology pretty effectively and for good purposes. We've got 4 or 5 projects that have built on Avalanche that tokenize event tickets. This is an area that I talk about with regulators and policymakers a lot because to Joachim's earlier point that not all tokens are financial instruments, the event tickets sort of highlights that fact in a really good way. Everybody gets tickets to events. I don't think DTCC is thinking about dematerializing them and being the CSD for tickets. But look, the point is that to go back to the container or paper analogy, look, when I was, I'm going to really date myself here. When I was in college, I waited online all night to go see Prince concert, and what I got was a couple of pieces of paper that let me get into the Prince concert. That doesn't exist anymore. Nobody's giving me pieces of paper. I'm just going online and creating a digital representation of what used to be a paper ticket. And so now when I go to an event, they scan my QR code on my phone, and they let me in and tell me, where my seat is. And so that, I think, is a really good non-financial use case, and we're going to start seeing more and more of those types of non-financial use cases because the technology is just really built for that, and the accessibility that it gives people on a global basis is really critical.
Would that solve the secondary market of concert tickets, football tickets, etc.?
I mean, nothing's going to solve the secondary market on tickets. If you want to go see Taylor Swift and you don't get the tickets directly from her, you're going to pay a couple $1,000s depending on where you are, right? Or if you prefer Beyonce, I didn't mean to prejudge who you preferred in that realm, but I think the secondary market stuff is just made easier with tokenization.
It is.
And so hopefully with easier, clearer secondary markets, that will mean that there's more price transparency and there's more ability to sort of figure out what you're going to buy, when you're going to buy it. But the best thing about tokenized tickets is if I sell my ticket to the Beyonce concert to Joachim, who's a big Beyonce fan, by the way, he has all of her records. No, I don't know. I'm just teasing him.
The room knows that I only go to metal concerts.
Well, it's to change to Metallica then. Yeah, they were also on tour.
Right. He knows that I've transferred it to him, right? You can see it on chain. You can see my wallet, it going into his wallet. I can see the tokenized stable coins coming back to me, or the Bitcoin, or however he wants to pay me. And so it's much more certainty for the buyer and the seller in the secondary market that what they've got is the real McCoy.
Yes, and I also think it's a way, as you were saying earlier, we already buy concert tickets or football tickets or whatever through a website, and we get a QR code. So the transition shouldn't be that challenging, let's say, for the user. From a user perspective, let's not forget that here we all know what we are talking about, but the moment you step into the real world, very few people actually know what blockchain is, unfortunately.
And I think that's a great point, Sol, this is another area where the technology becomes irrelevant to the everyday user. Right? Most of us don't know how everything works at DTC or at the other CSDs. Most of us don't know how everything on our iPhone works, et cetera, et cetera. Blockchain technology has gotten more popular to try to understand because of the big splash it made with Bitcoin and everything. But it's going to become just another type of infrastructure that people will use for whatever the use case is that they're developing.
Yes, without necessarily knowing that they are. Alex, let's move on to Stellar's examples.
Sure. Yeah, this was actually a point I was going to make later, which is that it's worth kind of abstracting like the technology away a little bit, and there are only certain folks who that is important for to understand how the technology works. And I mean, these are kind of the examples that I was going to give. So Stellar is heavily focused on payment transfers or value transfers of financial assets, and one of the largest fund managers, Franklin Templeton, they tokenize money market funds on Stellar. And I think that what's something to highlight here is also that yes, the tokenization or the asset is important, but it's also for example, for fund managers, the infrastructure or learning the back end is important, right? And so there is a reason why blockchains are so useful for the transfer and their recording. These are kind of fundamental value propositions of what blockchains can do. And so Franklin Templeton has a tokenized money market fund, and they're actually able to issue it or offer it directly to retail investors. Sorry, Tom, but it's very cost efficient. It's very scalable. This is not a new model, but this intermediate model is a bit more cost efficient on the blockchain. And I think the infrastructure leads to some interesting things because they're now exploring intraday yield or daily yield at the end of the calendar day, and yield is already calculated on a daily basis, but it's not offered on a daily basis because it doesn't make sense to do so. And so you're opening up these new opportunities when you're using these assets on these infrastructure. And then kind of another point I'd like to highlight is that stable coins in some ways are kind of the original tokenization asset. And so the value prop of payments or transfers are kind of really simple things on blockchains seems to kind of have been put aside at the expense of these more kind of complex or exotic assets that we can tokenize. And so on Stellar, a lot of multilaterals and nonprofits actually use the blockchain to send money to places that are inefficient corridors or don't have a formal banking system. And that's really interesting because that is basically the perfect use case for blockchain. And so you're sending them into corners like Ukraine or Argentina where there's high inflation, or Syria where kind of the infrastructure is crumbling, and you have really cool technology that the industry has already built and is really mature, like stable coins and it's self-custodial wallets. And so there are parts where the infrastructure remains a really important part of the conversation, but certainly only to a few.
Yes, and Stella does a lot of work also, as you were saying, in emerging markets, in Africa in particular, ensuring that there is access to funds that come from the so-called first world going into emerging markets, which I think it's a great proof of why the technology is useful.
Exactly.
And change people's lives.
Just on the Benji point, and I guess another example is Biddle as well. And I think, look, they're issued in, you could use the term non-traditional, but I think what's interesting about Benji and Biddle, and no need to apologize, because the way we look at this is, and it's kind of what I referenced earlier, which is actually the utility of those is both in a purely DLT, potentially crypto setting, but also there's the potential where you have actors that are in the traditional markets that can help enable activity onto that, right? So whether that is using it as collateral for on exchange margin somewhere, which is on a crypto exchange, or whether you're looking at potentially using that as margin for your more traditional collateral activity. And I think one of the things that we worked on this year is around April, we did the Great Collateral Experiment, and it was all around that kind of ability to move in and out of these different ecosystems, because that's when you're going to get the kind of true utility. Appreciating that the general direction is in a way which transforms the entire market that we're operating. But in this, for the foreseeable future, being able to move in and out of those different ecosystems and have the maximum utility for it, talking about standards and regulation, I think it is going to be crucial. And so something like a Benji or a Biddle, I think it complements the way that certainly we're thinking about our role in the space.
And if I just may add to that, the last remark is particularly important because I like all the use cases very much, and I think they are very important and show already the whole spectrum, or part of the spectrum at least, of what we can do with the tokenization. But there's even more to that, and that is a matter of concern when I look, for example, at the wonderful example of event tickets, because there's clearly a financial dimension to that. In Germany, already long ago, if you got, for example, a ticket for a football match by someone and there is a corporate dimension into this, you have to declare that in your tax declaration because it is an obvious value. Also, of course, if you have a concert ticket, it is a transfer of value in financial terms. The question is, and that is also something that kept us busy with MiCA, but in many broader instances as well, to what extent, if you have a utility token, is it primarily financial or is it not primarily financial? And somewhere there must be a border, because I completely object to the overkill of financial outreach when we tokenize things that have very clearly a value to someone, but not necessarily a direct financial value. And that can, for example, be if you exchange ideas, academic ideas, or in a chat room or something like that, where you just want to demonstrate that this is your idea. So basically you timestamp it, you tokenize it, but you don't really want to monetize it because it's merely for demonstration effects. That would be clearly outside the scope of regulation as far as I see it. And specifically in DAOs, and Web3 contexts, you have many of these things. So whenever we have these use cases, I think we also every time need to think about the extent to which that relates to financial regulation or taxation. We have one use case, and I cannot disclose what that is, where there is a very clearly definable remote community that basically trades electricity at a local level. So if one needs more from the neighbor, he gets it, and the other way around, and at the end of the day, there's a net value. And there are voices from tax authorities to comply the full Monty of DAC 8 to that, because although it's a remote and clearly defined community that basically acts as a cooperative, someone could have a double citizenship where then it matters for a tax declaration 5,000 kilometers further on or something like that. And these are things that block development. We cannot see the tokenization of real-world assets in all circumstances as an extrapolation of financial transfers. It should be the other way around. We need to find a basis where we set clear rules for tokenization of everything. And if then someone, for strange reasons in the financial domain, is concerned about AML and other stuff, let them justify that and ask for special rules. But I am completely opposed to this view that we have, and that is not here coming from the panel, but from many outside, that everything we do on the tokenization of real-world asset has first to be seen through a financial perspective. That is absolutely wrong.
It's a valid point. Go on.
So, sorry, Sol. I'd like to make 3 points. One point is to follow on Joachim. There's a difference between commercial and financial. So when something has value, that doesn't mean that it is a financial instrument. It could just be commercial value. And I think that's the point that Joachim is making very well there. And trying to keep the distinction between commerce and financial services is a hugely important thing, and something that I think MiCA mostly gets right, but I do worry that there's going to be situations where it's not going to be done correctly. The second point I'd like to make is what we are all talking about, and what we should all remember that we're talking about, is this new public infrastructure that blockchains provide. And it's that public infrastructure that allows Franklin Templeton to do something directly, that allows ticket vendors to do things directly. And that public infrastructure is great because among many reasons, it saves people money. You don't need to hire a whole programming team to program your systems. You can rely on the public infrastructure to get things done. And that brings me to my final point, which is it's public infrastructure that relies on the internet, which is also public infrastructure. Mm-hmm. And so we should all be very strong advocates for a free and open internet. And by free, I don't mean costless, I mean uncensored. We need to be strong advocates for that because blockchains don't work without the internet. And if you have a censored internet, then that inhibits what blockchains can do and what we can build. So we should all be strong advocates for that.
I feel that sometimes it's very difficult to sort of split the financial aspect of blockchain. As you know, crypto is the first thing that we think about when we think about blockchain. And what you were saying earlier about the tokenized money market funds, that also helps in a way to cater for different risk appetite for different investors. You can put so many different things into a tokenized fund. However, there was another example which was non-financial as well, and again, it can be, it shows that value means different things to different people, which was the real estate tokenization that we talked about in, I think it was New Jersey, that you said that this bringing all those deeds into the blockchain. I think that's an interesting example to share with the audience as well.
Yeah, so this is Bergen County, New Jersey, tokenized using NFT technology, all of the real estate in the county. So that's close to $250 billion worth of real estate tokenized. Now, why did they tokenize it? They didn't tokenize it so that everybody can start trading real estate in the secondary market and creating fractionalized real estate interests that get traded, et cetera, et cetera. The county tokenized it because they recognized that that's a better way to do the record keeping. Blockchain does record keeping really, really well. Mm-hmm. And so now they have the county's record keeping of real estate on chain in a way that can ensure ownership and ensure chain of title for people on into the future. So I think that's another great use case.
It is, Tom. Imagine doing that in England, and every time you have to, get yourself involved into a real estate. Not that you do that all the time, but once, twice in your lifetime, you need to involve solicitors and all that to try and dig all those, titles and covenants from the early 1900s.
But I think it goes back to kind of, and this is me speaking rather than in my role at DTCC, but it transforms ultimately the cost profile of selling your house and moving your house. And that is a huge, and then you think about what the impacts of the friction that you have in being able to sell your house or move or kind of upsize, downsize, whatever it is, and what that does to the economy in terms of what it does around house prices when you have people that don't want to move because of the costs that are associated with it. And so actually the movement of people between properties and making that more seamless has a genuinely, in my view, a kind of meaningful impact from an individual's experience, but also, and the cost that they pay, but also their contribution to the economy. If you look at the US, they have a really active property market. The UK does not. And so, yeah, I'll say it again, that's my views rather than DTCC's, but I think this is like a really interesting use case.
And just one sentence on that, if I may. At the self-organization and governance perspective to that, and that is why we have so many DAOs in Europe that are now interested in real estate, because if you can tokenize that specifically for the administration, but also the governance perspective, that gives you also much more power as a community to decide according to the principles you want to live and actually have daily interaction, who lives there and who doesn't, etc. So it is also a massive boost to democratization of markets, and real estate is a fantastic example for that.
Definitely. I am conscious of time, but there are a couple more questions I'd like to fit in if we can. Let's talk about the convergence between TradFi and DeFi and what real-world assets tokenization means for that. Because in a way, tokenization as stablecoins might be the first touch point that people might have with blockchain technology. So DeFi offers liquidity, transparency. TradFi offers regulated access, scale. To any of you, what do you think is the most critical friction point right now? Do you think it's technology, culture, regulation that is preventing a seamless convergence between TradFi and DeFi? And what do you think is the step that Europe should take to bridge that gap?
I'm happy to jump in first. So I think it's broadly kind of what we've covered from a regulatory and a standards perspective. I think let's kind of park that for a minute. If you think of traditional finance and the way it operates and all of the regulations that we have around what we do and what we're able to do, the clients that we're able to onboard, the counterparties that we're able to trade with, the idea of that leap into a kind of DeFi world where you start to move into a permissionless or a trustless environment. That's a giant, even if we think about the psychological leap of that and the people that are sat within financial institutions, who their job is to understand the risk profile of all of the institutions and the trading activity that's ongoing. The idea that you then move into a brand new environment, that's quite a kind of psychological leap. So I think there's certainly regulation, there's kind of the people side of it. And then I think from a technology standpoint, I think that the scale that comes over the next couple of years in traditional finance is going to be the tokenization of existing assets to transform some of the existing processes that are burdened with friction, whether it's collateral, whether it's a securities lending trade, something along those lines. And then gradually you'd see a move into kind of the DeFi space. I think what's interesting is who are the actors that are going to enable that sort of activity, and how are the regulations going to support that. So I think there's a lot of talk around it, and I think, for example, you can, RWA .xyz has all of the tokenized treasuries that exist on chain. They are invariably not being utilized by traditional financial institutions at scale, and they represent a fairly small amount. So I think it will take some time, but I think regulation, I think from a psychological perspective, it's quite a leap. It's not insurmountable at all. And then I think from a technology standpoint as well, there's going to be a lot of work to do to justify the business case to go into DeFi.
Maybe very briefly on that, two points, and I have conflicting minds on that, I must say. I think that it's good if DeFi and TradFi get inspired by each other. DeFi can get a little bit more compliant in some instances. TradFi, I think, is very well advised to learn about the utility of distributed networks and other governance principles, and specifically for the financial domain, I can really recommend the OMFIF report on public blockchains that sets this out very clearly. I must say, from my anarchic self, though, I am very much opposed of too excessive convergence of TradFi and DeFi, because I don't think that if we really not have the thorn in the flesh of TradFi by radical decentralized systems, then we will not have progress. And I see much too often that TradFi discussions take a corrupted view of DeFi by just ironing this in a neat way to make it fit, whereas they don't want to go as deep as they need to be to really understand the revolutionary potential of self-organization of decentralized communities, and they would be well advised to do so.
And there will always be, there is a reason why DeFi exists. There will always be a requirement for that sort of privacy, and that's why it is there. They couldn't, as I tend to agree with what you've said, they couldn't converge completely.
Sol, sorry.
Yes.
Just two quick points to add. Look, the biggest problem for DeFi is going to be the AML problem. And how that works itself out is completely unclear to me, but that's going to be the biggest problem because regulators and policymakers are always going to have that in the back of their mind. But there is a second big problem, and the second big problem is exactly what we've been talking about, is once you tokenize lots of different asset types and they can all trade on DeFi protocols, suddenly you're in a world where, stocks are not trading just over there, stocks are trading everywhere. Event tickets are not just being bought and sold over in another corner, they're being traded everywhere. And so you will have these marketplaces where all different types of assets, both financial and non-financial, are trading together, and figuring out how to deal with that from what I will loosely call a market integrity standpoint is going to be a huge issue. And we're not ready for that, but it's here already, and it's only going to get more here as time goes on.
Sorry, I just want to quickly jump in also. I think that up to now, or for a very long time, most of the technology in this space has been built for the end user, which is us, I guess. And that is not kind of where this industry, at least in the financial services perspective, is moving. Like we're no longer facing, me and you, like the banks are interested, the large institutions are interested, and there's a very different narrative that needs to happen here to understand kind of who the audience is, and I don't think we've kind of quite figured that out yet, because I think if we did, I'm not sure if we would be selling the average user this DeFi AMM liquidity pool thing. Like I am an average user and I don't want to do that stuff. I just want something that works well and it's very easy to use and it improves on something that I already have, right? And so this narrative also kind of needs to shift a little bit on like who exactly we're looking at and like what they actually want. And if we're looking at like in the financial services space, like banks or financial institutions, I don't know if DeFi just means like on-chain finance or if it means DeFi into like the deep dark pool area, or it means like AMMs. Like it's kind of this catch-all term that has kind of lost some meaning and has maybe even been co-opted in like a negative way that is maybe inhibiting some of the conversations that we actually want to have.
Thank you. I know we're out of time, but I'm going to add one cheeky question, particularly from you two coming from outside the EU. And it's not that, we don't have a geographical competition, but we do in a way. What do you think that the EU needs to do to win this race and position itself as leaders in real-world asset tokenization, despite the fact that we understand this is global, but certain regions will be more welcoming than others, and there's competition from Asia, from the UAE, you name it, the US. So what do you guys think is needed?
Yeah, I would go back to my point on infrastructure. I mean, in the US, there's DTCC, and that's kind of it. In the EU, there are a lot more CSDs. And I think that, and it's not just the EU, but I think that there's a big unlock to whatever jurisdiction can figure out what the rules of the road are from the operational perspective. Like right now, a lot of tokenized assets are like a digital twin, so they are still moving. There's still some kind of like real world off-chain book entry version. But if we are to move natively into a world where it's natively issued on-chain, what is that going to look like? And I don't think any jurisdiction has solved that yet, and that's kind of the big unlock, in my opinion.
I very much agree with everything that Alex just said. I'll just add, there needs to be a way to stimulate entrepreneurship that's going to push these efforts forward. And without that push from entrepreneurs, I think things will continue the way they are.
I'm not from outside the EU, no. From inside the EU, I don't care about winning. I have done about 200 running competitions in the last 10 years. I have won one of them, and that was by mistake. And it's not about winning, it's not about the EU. What I would really love to see is everyone who is coming into the space, the young generation, understanding these principles, experiment with them. They are mobile, they go where the good places are in a way, and many of them actually come back to Europe or stay in Europe. But this for me is a global thing for humanity as such. And I think if we live up to the principles that we discuss on this panel, the EU will benefit, as will other places in the world. But let's not see this as a sports competition. Let's see this as an honest intellectual exercise where we take the interest of those communities that desperately need more empowerment and more self-organization.
I like your selfish approach, Joachim. Thank you for that comment. Tom, is there anything you'd like to add?
I mean, I'm really going to echo it, but more, again, from kind of a capital markets perspective, that actually the benefits of tokenized things within a specific region, the margin of benefit is relatively, I won't say minor, but it is not as impactful as if I can move a JGB, a European government bond, and a US Treasury all on an instantaneous basis, on a 24/7 basis. So actually, when you think about the business cases for firms to make use of this technology, being able to move something which is already in a relatively closed ecosystem, which moves fairly frictionlessly today, the margins are not there. If you can start to look at this from a global perspective, then you start to really change the profile of that business case, because maybe your capital footprint changes, maybe your intraday liquidity buffers come down. All of these things that financial firms are thinking about, that starts to materially impact that, and so that can then start to drive scale.
Thank you. Tommaso, you are the boss. can I ask the audience if they have any questions? Okay, if there are any questions from the audience, we have a very keen
There was
lady.
someone really ready for it, so yes.
Thank you.
Yes, hello, yeah. Clara Guerra from the Liechtenstein government. It's more like of a clarification or contribution, because Tom, you mentioned the legal foundations and Luxembourg, and I'm not sure if you meant Luxembourg or Liechtenstein, because actually Liechtenstein is the country that really has defined what a token is and how that legally is incorporated into our system, and we even have a civil law for tokens, so really clearly not just defining the token as a legal object, but also when ownership is transferred and how, and even the acquisition of good faith and when a token gets lost and all of that. So this is what we have fixed and established in Liechtenstein.
Yeah, so I did mean Luxembourg, and I didn't mean to pass over Liechtenstein. And I was looking at this purely from if you look at the kind of growth of the ecosystem in Luxembourg and the sort of companies that exist there, where they're making use of rules which are, it's more around the use of DLT as a form of tracking kind of book entry. And so from the sort of conversations I'm involved with, that's kind of crucial. It's more that I haven't had to deliver products in relation to Liechtenstein. So there was no offense meant.
No, absolutely not. I just like to contribute and clarify that. Yeah. Thank you.
Thank you. Any other questions from the audience? Excellent. And I think we are good to go then. Let's have more coffee, shall we? Thank you very much for your excellent contribution. Thank you to the audience for being here nice and early. Thank you.